So as you go to this exam, ladies and gentlemen, there are some acronyms that are normally saviors that you're supposed to remember very fast, when they ask you about ethical threats. Please don't forget these. I've repeated this severally. Ethical threats. Ethical threats. Of course, here we normally talk of what here? Mr. Who? Mr. Surface. Ethical threats. Always you talk of Mr. Surface. And remember that these acronyms, for those of you who have got these books that we have written as RCM Online College, you'll simply need to go to the back page. You'll be able to get all these what here acronyms. So of course, like ethical threats, we have what we call self-interest. We have advocacy. We have familiarity. We have intimidation. We have we have self-review. So remember that you have to consider these ethical threats before you accept an appointment or before you renew your auditing engagement, right? If you feel in this case that these threats are too high and you can't put in enough safeguards, please reject the job. And then we have the indicators of threats. Indicators of threats. Indicators of threats. If you can remember very well, we normally use the acronym full stop. Very important. We normally use the acronym of full stop. So the moment I'm able to see these indicators, then I should stop working on the job, or I put in safeguards to ensure that everything will be okay. So the first full stop there, we have here indicators of threats, full stop. We have friends and family. We have this undue fees. The concept of what here? 15%, if you can remember, concept of 15%. So we have loans. It is loans to stroke from. Once you receive a loan from that particular client, that is quite a big indicator of what here? A threat. Because the CV has given the advanced a loan of say 5 million to you. Will you be able to give him a bad opinion? He'll call back his facility. So it's important for you to know that. Then we have this other L for litigation. Mkishapelekana kotini ni hivyo, international disaster. Hiyo uhusiano imeisha. Then we have shares in the client company. Of course, that means you'll be having a self-interest in that company, shares in the client company. We have here taking gifts. So basically, we are talking about undue hospitality. Yani unaenda kuaudit, wengine wakipatiwa chai kavu, unawekewa ka sausage, unawekewa kwa mayai. Hapo unajua ni undue hospitality, which is really an indication of what here? Threat. An indication of threat. And then we have overdue what here? Somebody. We have what we call overdue fees. So under overdue fees, ladies and gentlemen, it's our recommendation that auditors, when they hand over their report like that, they should be paid like the same day, like what SACCOs do, right? Because once in this case here, you owe them money, automatically that brings in some kind of what here? Dependence. So this guy will be on his knees down, always telling you, please pay me last year's fees. When he's on his knees down, there is no way he'll be able to give you what here? A bad report. There's no way he'll be able to give you a bad report. And then we have this P. The other P is provision over other what here? Over other services, other than what here? Audit. What we call the non-audit services. Non-audit services is a big indicator. Is a big threat. Why? Because when you're offering these non-audit services, number one, of course, there shall arise what we call self-review. So self-review, you'll be getting a chance of relooking at your own at your own figures you had calculated earlier When you are engaged in the non-audit services, ladies and gentlemen, when you are auditing, that will be very bad. And again, provision of other services here to the same client will automatically, ladies and gentlemen, lead to what we call what here, your fees being very significant fees. You're receiving significant fees from one client. You are receiving significant fees from one client, which will be what here, an international what here disaster. You will get this assignment from this client, another assignment from the same client. So at the end of the day, you will end up getting more than what here, more than 15%. So ladies and gentlemen, is this okay? Is this okay? The concept of the indicators, and the question really will be guiding you. The question will be guiding you. You'll be able to see here, this guy has friends in the board. This guy has family in the board. That is a threat, right? That's a threat. That's a threat. Okay. So are we okay with this? Can we go to something different? 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 Yes. Now, the last one that I would want, of course, the others I know you guys know, kama zile za ACCA covers mmejua sana. The other one that I would want you always to think about is the categorization of internal controls. Categorization of internal controls. Categorization of internal controls. Categorization of internal controls. So categorization of internal controls. So akiuliza swali ya internal controls, grouping of internal controls, hii mnajua sana, what tunasema ni spam soap. Categorization of internal controls. Categorization of internal controls. Right? So like we have in this case internal controls, which are organizational, whole organization, organizational in nature, organizational controls. We have these, ladies and gentlemen, stands for what? Physical controls. The lock and the key. Physical controls. We have A standing for what here? Arithmetic controls. So we have arithmetic controls. We have another A there for authorization, stroke what here? Approval. This is very important. For example, when they tell you to give a procedure for reconciliation, auditing reconciliation, first of all, I'll have to check for board minutes for what here? Approval, right? Where in this case here, for example, they'll say that this particular bank reconciliations will be done on this particular time, and they'll be done by, for example, the chief accountant. So we know who to ask this information from, right? When they talk about arithmetic controls, we are looking at the casting. Are the totals agreeing? etc. So we have, ladies and gentlemen, the next one, we know that we have got what we call management controls. This is quite a key categorization. Then we have segregation of duties. Segregation of duties. This is a very important control, which you should always be mentioning in whichever. We can work controls over assets, right? Controls over cash. Unajua lazima kuwa na segregation. Huwezi kuwa mtu mmoja una receipt, ndio una receive, hapana. Segregation. To segregate is to separate. To segregate is the opposite of aggregate. When you aggregate, you're putting together. When you segregate, in this case here, you're doing what? You're giving duties to many people like that. Giving duties to many people like that. We have this S, ladies and gentlemen, very important control, supervision controls. And then, of course, we have the general personnel controls. So please guide me whether I should be able to rub this. After all, these are things that you guys are done in class, really. It's not even part of what I should be discussing. These are too basic, you know. These are too basic. Yeah. Thank you very much. Boniface, I can see you are raising your hand, but there are students really here who don't know how to mute themselves. So if I should unmute you, it will become disastrous. Could you kindly, in this case here, just type your question. Kindly type your question, right? So please, if you have got this book, I would recommend that you go to the back of your book. You'll get more. For example, we have got these control procedures. The control procedures, very, very important. Before I start perhaps my today's session, control procedures, very important. These are very important. Control procedures. They are very similar. You'll always keep on adding from whatever I've given you. When you are asked something to do with the control, you always think of what here, these things. Like now we have here the car cup, like the wheel cup, the car cup. So you go down like that, car cup, the car cup, like that. So the first one is comparisons. And analytical procedures, comparisons are very important. For example, they tell you to give them audit procedures over payables. Payables, I'll have to calculate, like, for example, the creditor days for the current year, creditor days for the last year, and then I compare, right? That's a good, in this case here, control procedure. And I'm testing controls. So we have here comparison. We have authorization. We have reconciliations. We have computer controls. For example, the controls to do with what you access, passwords, right? Firewalls existing. You know, we need, like now when we talk of auditing of e-commerce, we need websites which have got very strong firewalls, so that in this case here, they are not hit by cyber attackers. So those are the kind of things as an auditor I would want to look under computers, and of course see whether, you know, when I'm doing computer auditing, for example, when I'm looking at auditing of clouds, data storage, right? Auditing of computers, I'll have to look at these things of passwords, right? Who is in charge of these passwords? Who has these passwords, right? How often are they changed, right? I'll even bring in what we call the cyber security people to come and try, in this case here, to penetrate these systems here, right? Using their own password, they crack, right? If they crack, of course, I'll be able to know that the firewalls here are not okay. Those are the kind of things you raise, ladies and gentlemen, right? Is the data in there good? What type of, for example, virus software they're using, right? Computer controls, I have to talk to the people who sold these computers to us, to my client, I mean, right? So I have to do some secularization here. Ladies and gentlemen, if there are any softwares in between there which are custom made, I would want to talk to those people and they get to see, for example, whether they provide continuously what we call vendor support. Because so many guys will go and acquire, for example, an ERP from India, and then the next day, the ERP providers, they run away. So then they have got nothing. As an auditor, I should be able to raise a question mark and ask the management to do adequate disclosures that should this, for example, system fail to work, we are going to have major challenges, right? So computer control is very important. From there, we have the arithmetical, very similar, I told you, arithmetical controls. So ukisikia anything to do with controls, unaandika kitu kama hii tumesema hapa, car cup, the car cup. Unaandika kitu ya spam soap, unajaribu kuzikumbuka from there. Ukijaribu kukumbuka from there, you cannot go wrong. Utaenda kupata marks mingi sana. And then of course we have this P standing for what here, somebody for physical controls. And then the others are very, very popular. I know all of you must be having this book. Is that not true? All of you must be having this book, true or false? All of you must be having this book, which can be a lifesaver in the last minutes. Tukone kitabu ama hatuna? Tukone kitabu ama hatuna? Tunayo ama hatuna? Mnaongea haraka haraka. Tunayo ama hatuna? Tuko nayo ama hakuna? Wengi wajaongea. lazima watu wako nayo. So like when we talk of evaluation of experts work, evaluation inajua sana hii, evaluation of experts work, there are so many things I need to consider, but I'll never forget the CCO. I'll never forget the CCO. I will never forget the CCO. Is this person competent? Is the person competent? In this case here, is the person, in this case here, capable? Does he have that capacity? You know, he could be competent, but he doesn't have capacity. So capable like that. And in this case here, are they objective? Are they objective? Are they independent? Are they independent? CCO, very important. CCO is very important. CCO is very important. And then the last one, for those of you, for example, who have never been to my class, is the last one. There are many of them, but the last one is the control objectives. Is there anybody who is able to remind us control objectives? Is there anybody who is able to remind us the control objectives? Control objectives. Control objectives, what do we have? Is there anybody who is able to remember the control objectives? Is there anybody who is able to remember the control objectives? Yes, the control objectives are a stop. They're normally 5, a stop. Because, you know, controls, we are putting in controls to stop these thieves from stealing from us. So a stop, control objectives are stop. So the first one being accuracy, the second one being safeguarding of the company's assets, safeguarding of assets. We have receiving reports on a timely basis. There must be order in the company. Then we have what we call prevention of what here? Fraud and error. Prevention of fraud, error. Prevention of fraud and error. Could you kindly do me a favor? Without looking at your notes, these acronyms that you've been able to study today, which acronym do you think in this case here can you never forget? Somebody in capital letters. In capital letters, before I move on to something different, which acronyms can you not forget, ladies and gentlemen? Which acronyms can you not forget? You may not remember everything inside, but which acronyms in full will you never forget? Somebody type for us there very fast. Akoth Winnie, thank you very much. ACCA cover for what here? For the management assertions. I like that. Akoth again, I'm going to put another one. A stop for the control objectives. How about the other students? Henry amesema yeye amependa mambo ya gari sana. Wheel cup. My wheel cups have to be very nice. Wheel cup, they speak so much about yourself. Car cup. The car cup comparisons, etc. Wengine wakumbuki yote. Full stop. The indicators of threats. Anakumbuka F ya kwanza ni family. Family, they live and destroy your businesses. Then Susan Mwenda amesema yeye anakumbuka ile ya A, E, I, O, U for substantive procedures. I love this. A, E, I, O, U for substantive procedures. For substantive procedures, we have A, E, I, O, U. So A is analytical procedures. We have in this case here inquiry, stroke third party confirmations, We have inspection, we have observation, we have recalculation, stroke reperformance. Thank you very much. Recalculation, stroke reperformance. Thank you very much. These are things ukienda ukiongelelea leo utapita sana hii exam. Akoth Winnie anauliza full stop in full namaanisha nini? Yeah, there is somebody who is talking of spam soap. Yes, Joanne. We have Boniface has gone for the easiest. This one of assessing the work of an expert. Assessing the work of an expert. We have CCO. Is this guy competent? Is he capable? Does he have that capacity? Yes. Is he objective? Thank you very much. And if you allow me, I'll be able to go to the next thing because I know you guys are clever. You're going to give this lady called, is it Winnie? Yeah, Winnie. I'm so sure somebody will be able to explain to her what this full stop means. If they will not explain to you, Winnie, please, I'll be able to do that very fast. Now, something in this case here that can easily something that can easily come to your exams this time around is this auditing in the public sector. Auditing in the public sector, of course, these guys will ask you very simple question between, or rather in this area, simple questions really. Simple questions really. Simple questions like which one? Like differentiation between performance audits and the compliance audits. They'll ask you about the 3 E's. 3 E's. Remember, ladies and gentlemen, for public sector entities, they are not there to make profits. Then in this case here, they are there to satisfy the 3 E's. So is there somebody who is able? Thank you very much, Susan. Susan, you're the best. Susan, I should be able to buy you a present, right? Take time, right? Thank you very much. Great. Now, ladies and gentlemen, could you kindly remind us, for public sector entities like Kenyatta National Hospital, these guys, even if they keep on making losses every other year, every other day, they can never be closed, because basically they exist to serve the public there, right? And for them to then be measured in terms of their work, then we have to look at what we call the 3 E's. Is there somebody who is able to remember the 3 E's? Is there anybody who is able to remember the 3 E's? The 3 E's. amesema economy. amesema economy. The 3 E's. Yep. So we have economy, efficiency, and effectiveness. Economy, efficiency, and effectiveness. Effectiveness. Now, unfortunately, very many students will remember the 3 E's of public sector auditing, but they will never know how to describe these things nicely. Like, I'm so sure out of the 36 people that I'm seeing here, if you ask them, ladies and gentlemen, to define what economy is, what efficiency is, right? In this case here, what effectiveness is, now, to simplify this, because of time, you know, me, I'm a full-time employee. I have to disappear at 6 exactly. I have to disappear at 6 exactly because of avoiding a jam. Now, effectiveness, ladies and gentlemen, of course, here we are looking at is the company meeting the objectives? 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 If it is meeting the objectives, yes, then it will be said to be what here? Effective. Effective. Kenyatta National Hospital has got a mandate of treating their patients. If they're able to execute, right, meet their stated objectives nicely, even if they're making financial losses, then they are effective. And in this case, they should not be done what here? They should not. In this case, you have we're talking about a closure. When we talk of economy, we are looking at the input purchases. Economy. And ensure in this case here, you acquire the right input at the lowest possible price. And ladies and gentlemen, we know that efficiency is all about the output over input. They'll tell us to increase the output as we reduce the input, right? They'll tell us in this case here that we need to maximize the output from little resources that we have. Maximize your output from the little resources that you have. Maximize your output from the little resources that you happen to be having. Right? Remember, it's a high level. There is really nothing much to discuss about this. But I want to believe you guys have been able to pick something, right? Have you been able to pick something from there so that I can go? Yeah. Can I go on to the next thing? So when they talk of efficiency, remember the output has to be more. So we must talk of what here? Operational efficiency, right? We must talk of even environmental efficiency, where you use the 3 R's. When you see papers around, always consider reusing them, recycle them, right? Things like that. We must, in this case here, minimize our operational cost, but ensure that output is at the top. Output is at the top. Output is at the top. Somebody can help Purity there kindly. Mimi nimeshaweka gear ya kusonga mbele. Mimi nimeweka gear ya kusonga mbele. The 3 E's are now okay. Now, there is something that you guys never told me. Difference between performance audits, and the compliance audits. Difference between performance audits and the compliance audits. Is there somebody who is able to tell us this very fast? Now, when we talk of performance audits, you must have seen our Auditor General here talking about performance audits so much. Telling, for example, these counties that this county was able to meet their target for revenue collected from the county. Other counties have never met their targets over the 10 years they have been in existence. So how are these counties performing? Are they able to meet their key performance indicators? Are they able to meet their objectives? So basically, the 3 E's comes here. The 3 E's comes here under performance what here? Under performance audits. Compliance audit, ladies and gentlemen, as the name tells us here, comply is are these public sector entities, are the public sector entities operating within the law? Within the law. Are they, for example, complying with NEMA, right? Are they, for example, meeting their statutory deductions? You'll get like in the University of Nairobi, which is a big public sector, the OKRA over 2 billion Kenya shillings. They're not able to. So in terms of compliance audit, then the Auditor General was able to raise what here? A red flag. Was able to raise a red flag. Was able to raise a red flag. And this has been tested severally, really. Like if you look at May 2018, question number 3C. In the context of public sector auditing, distinguish between performance audits and compliance audits. And then I'll read the answer straight away because of time. We are told here that performance audit focuses on whether interventions, programs, and institutions are performing in accordance with the principles of economy, efficiency, and effectiveness, and whether there is room for improvement. Remember, for public sector, the auditor is not doing audit for purposes of really reducing a farm. No, they always come and say, these are your area of weaknesses and you need to improve. And remember, for them, they have a mandate. They have an obligation of publishing those areas of weakness. That's why you always read about Auditor General has said this and this about even the office of the presidency. They don't fear because they've got that obligation to the public to disclose like that. So the key thing is that they're identifying areas of weaknesses, which in this case here in their management letter, the one that now that they do to the governing authorities will give a management letter talking about how should these particular public sector entities improve. When we talk of compliance audit, it focuses on whether a particular subject matter is in compliance, right? In all material respects with the authorities that govern the audited entity. The authorities may include rules, laws, and regulations, policies, and established what-year codes. Ladies and gentlemen, this is the thing. When they talk about compliance audit, the thing is this public sector entity obeying the law? Is it obeying the law? For example, we have got the law on minimum wages and salaries. Do you have anybody, for example, who is working at Kenyatta National Hospital earning 6,000 Kenya shillings? Are there public sector entities that take interns, give them nothing, and then they hold them there for over 3 months? That's wrong, right? You're going against the law. So compliance and compliance auditing basically talk about obeying the law. When you talk of performance audit, always look at how is this particular public sector entity doing in relation to what year? The 3 E's. Are they able to meet their key performance indicators? Right? If, for example, last year, Kenyatta National Hospital was able to look at this number of cancer cases this year, how many cancer cases have they been able to look at successfully, right? Once you start going that way, automatically you'll get the operations in the public sector entity moving on very well. And then November 2015, they asked us, November 2015, they asked us to discuss the 3 E's for value for money auditing as used in public sector accounting. This is the same thing. 3 E's, remember 3 E's is value for money audit, value for money audit. That one I'll not discuss it because tumerudia sana hiyo. Now, how about May 2016 question number 1? May 2016 question number 1. I'm not interested with part 1. Part 1, they wanted us to define the term performance auditing. I'll be able to use a lot of language. But at the end of the day, I must mention there something to do with what here, value for money audit, the 3 E's. Are these organizations able to meet KPI? And really, that is what this auditor general is going to ascertain under performance auditing. How are they performing? That is the key thing, ladies and gentlemen. And then number 2, discuss the 3 approaches that might be taken in examining the performance of the audited entity. Discuss 3 approaches that might be taken in examining performance of the audited entity. So basically, which approaches will the Auditor General use to carry out performance audit, 3 systems really that you guys must be knowing. Three approaches. There are 3 approaches. The first one is the results approach, where we look at the surpluses, the incomes, right? Results approach. Are we improving? And of course, using the CAP, comparisons, accuracy, etc., segregation, right? All those things that I told you, right? So results approach, right? So this is number 1. Number 2, of course, they'll do what we call the system-based approach, where they look at the systems and really be able to tell whether this company is investing in systems progressively or not. Systems-based approach. And then we have the last one, which is the problem-oriented approach. So under problem-oriented approach, for example, the Auditor General will be called in to go and investigate a particular company, a particular issue in a company, right? So the Auditor General will be told, you go, there is a problem there. Please go and help us before we come even for the firefighting. Go and help us there to see whether this kind of corruption we are hearing being spoken about in the dailies, whether it is truthful. So then here, this automatically, we are going there to look for this particular problem. So the auditing will be surrounding only one area. So I hope you guys have got a key helicopter concepts now, which you can use to attack this question, right? So can I go to the next concept? Yeah. Great. Okay. Remember, it's high level. So we were told the last question here, right? The last question here is November 2019, question number 4C. November 2019, question number 4C. Describe 4 objectives of public sector auditing. 4 objectives of public sector auditing. Why should we do auditing in the public sector. Why should we do auditing in the public sector? So four objectives. So four objectives of public sector auditing. Four objectives of public sector auditing. So the first objective, ladies and gentlemen, of course, is to give what? To give an opinion. That's like for the profit-making entities, private entities. So in this case here, the general or auditor general will be able to give an opinion as to the truthfulness, fairness of the financial statements presented. That is the first objective, right? The second objective, ladies and gentlemen, here of public sector is to ensure value for money given by government. Value for money, right? We have the concept of enhancing what here? Enhancing accountability. Accountability stroke what here? Transparency, right? We have in this case here the addressing of what here? Areas of weaknesses or improvement areas, continuous improvement through what they shall give at the end of the audit, what we call the management what here? The management letters. Okay. Others, of course, you guys can use that book. Great. May 2017, question number 5A. 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 Question number 5A. May 2017, question number 5A. So as you open that question, ladies and gentlemen, I would want to remind you the following. About types of auditors, what here? Types of auditors reports. Of course, you guys know that we have what we call unmodified, and then we have what we call modified. So unmodified are the good. These are the good reports. Where, ladies and gentlemen, we are giving a report telling the public that the financial statements of RCM Online College, portray a true and a fair view. Good reports. But remember that even in good reports, there could be what we call E or M, isn't it? I've given you a qualified report, but there is an emphasis of matter paragraph. For example, we are drawing the attention of the readers, of the users of the financial statements, right, to a particular matter like going concern issues. We tell them that as per note number 16, given by the management of the company, right, in the disclosure notes, the company has going concern issues. So it could be a good report, but with what somebody emphasis of matter paragraph. And then now we have the modified. Remember, you can modify, ladies and gentlemen, your report. Number one, if financial statements are erroneous. If financial statements have an error, erroneous. And if in this case here, there is what here? A limitation. If there is a limitation in what here? A limitation in scope. And I've always repeated this. Severally, ladies and gentlemen, because of its importance in your exams. Now, ladies and gentlemen, please listen and listen to me very well. We have what we call material here, material, and then we have here material and who? And perversive. Material and perversive. Material and perversive. So this is what we call single. This is what we call plural. Plural. Single plural. Right? So if, for example, you come to audit books of the RCM Online College, I've always repeated this, ladies and gentlemen, and then you realize that our sales is okay. We have our cost of sales is okay. The only item that has an issue is our tax computation. Our taxes that we remitted were too little, and you feel that really that cannot work out. Ladies and gentlemen, what you will do if we do not, remember as an auditor, you'll have what you call a statement of uncorrected errors. A statement of uncorrected errors, right? Now, you have already ascertained there is one error. One error in terms of what year tax, right? Like the case of Lukenya, if you remember the case of Lukenya, very, very critical case that I would want you guys to look at for those of you who would want to become auditors, for those of you who would want to become tax consultants. Lukenya, the owner, the lady, has a Lukenya Academy and then Lukenya Secondary School. Lukenya Academy, right, had financial issues, right? She went and borrowed using a loan, using these Lukenya Academy properties, etc., right? And used that loan, in this case here, to do what here? To sort out our issues. Great, but the lady was bright. She realized that Lukenya Secondary School was highly profitable. And she wanted to reduce that profit a little bit. So what did she do? She asked the accountants to book the interest paid for this loan borrowed under Lukenya Secondary School, which took the profit to a loss. So she continued doing that for some time. KRA was able to discover, hey, KRA, you have been paying some installment tax and then you reduce at once, automatically in a span of 4 or 5 years, they'll notice there is a problem. Because nowadays they even call if you are in the large taxpayer, whatever. So, ladies and gentlemen, the concept is this. I'll be able to give you these stories later. Remember, I've got mentorship classes. Those are stories which I should be able to give you later. But the concept here is this, that if the error is only one error that we have, then the kind of opinion we'll give here will be an except for qualified opinion. Except for qualified opinion. Except for qualified opinion. So basically, we are saying that except for the fact that tax of Kenya shillings 10 million remains unpaid, the financial statements of RCM Online College present, or rather, they are truthful, they are what here, they are fair. The financial statements of RCM Online College, ladies and gentlemen, are truthful, are fair, except for the fact that they have not remitted tax of Kenya shillings, what here, 10 million. So you only give a qualified opinion when it is like a matter, right? What if in this case, now you came to RCM Online College and then you realize that our sales is wrong, our cost of sales is wrong, administration expenses are wrong, we have in this case here all other expenses are wrong. Will you start telling us that the financial statements of RCM Limited portray a true stroke fair view, except for sales, except for cost of sales, except for administration, except you'll be called auditor, Mr. Except for. When the errors are too much, when the errors are too many, we talk of plural now here, when they are material and pervasive, then straight away you disqualify everything by giving us what we call an adverse opinion. By giving us what we call an adverse opinion. So basically, we say that the financial statements of RCM Online College do not portray a true stroke fair view. Do not. The same case with the limitation in scope. Ladies and gentlemen, if you give me a chance of auditing your organization, of course, you have given me a 360 degrees room for moving around. You can't come later on and then you start telling me that, you know what, this is my bedroom. You cannot go in as an auditor. I need to go in everywhere. If it's board minutes, I have to read them. If it's about your employment, whatever, I have to go through them. So if, for example, you guys are just curtailed me in only one area, you are so good, so friendly, you gave me whatever ledgers I wanted, but maybe I was not able to attend something, right? There's one procedure I was not able. If it's only one and it is material, then you'll come and give what we call an except for, qualified, and except for, qualified opinion, and except for, qualified opinion. But what if I come to your organization and then you come and tell me, ladies and gentlemen, that the entire accounting department, like it happened in Kitui County, the entire accounting department got burnt down. It means I'll not be able to do any procedure. It means that there is a problem. So which opinion should I give here, somebody? Which opinion should I give there, somebody? Which opinion should I give here, somebody? Which opinion should I give here, somebody? Which opinion should I give there, somebody? Which opinion should I give here, somebody? Which opinion should I give here, somebody? If things are really not working out, there are even companies that I know, when an auditor just shows up like this, everybody runs left, right, and center, and then the auditor will be left standing alone at the middle of a room. Auditors go through so much. Auditors and the KRA staff, I'm telling you, you really need some thick skin and the grace of God for you to survive. So if every day you are coming in and everybody is running away like that, then you will not be able to form any opinion because you will not be able to gather sufficient appropriate audit evidence, right? So in that case, here's a course, and Joan and Purity up there told us, here we need to come and issue what we call a disclaimer of opinion. We need to come and issue a disclaimer of opinion. So now with that, could we kindly go to this May 2017 5A? 5A. So state the opinions you would give in each of the following situations. State the opinions you would give in each of the following situations. Number one, the books of the client were taken away by the regulator for investigations and were not available for audit. So that, of course, is a limitation of scope. So I need to ask myself, is it so bad? Is it so bad? All the books were taken away by the regulator. I could not perform audit. It is so bad, yes. So then that one, which one should I give somebody? Which one should I give among us these four? Which one should I give? 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 So number one, according to a course, is a disclaimer, you're right, because really you will not be able to do any audit. It's a disclaimer, thank you very much. Number two, the provision for doubtful debts was not adequate. The debtors in the financial statements were misstated, but the financial statements gave a true and fair view. So if the financial statements gave a true and fair view, and it's only one item that has an issue, one item called provision for debtors that have got an issue, then what I'll do there is to go and give out what we call a qualified audit opinion, and except for qualified audit opinion. Look at Roman 3. Thank you very much. Look at Roman 3. There was no provision for depreciation, and the directors were unwilling to provide for any amounts during the year. The amount, if provided for, would reduce the reported profit by 30%. By 30%. Now, listen to me very well. Of course, that is one item. That is one item. I agree. One item, which of course I should have gone ahead to give what we call an except for. But look at the misstatement impact. That if they provide for this depreciation, automatically the profit share will go down by a whole 30%. Don't you think that is quite pervasive? It is pervasive, and therefore I should be able to give what we call what here somebody an adverse opinion. Thank you very much. Roman 4, the last one. There was a legal suit filed by a customer who was unsatisfied with the goods supplied, but no provisions were made in the books. The assessment of the case by the company lawyers indicate that the customer has very slim chances of success. Perhaps below 50%, below 50%, right? Chance. So there was a legal suit filed by a customer who was unsatisfied with the goods supplied, but no provisions were made in the books except for qualified. Ladies and gentlemen, if this particular case has a very little chance of survival, very little chance of success, automatically it is an immaterial thing. And if it's immaterial, if it is immaterial and the other items are okay, then why should you qualify? You can only qualify, bring it out, if it is eminent. If in this case here, we know it shall crystallize. Shall crystallize. So, ladies and gentlemen, this one, I'll go ahead and give what here unqualified opinion, but of course, I know I'm the one who misguided you here because I pointed to this. This one automatically falls under unqualified. Unqualified. I only take cognizance of the fact of taking this particular kind of an issue to my auditor's report if it is material, if it has got high chances, of crystallizing, of us being knocked down in a court of law, then it becomes a contingent liability that has to be fully disclosed. And of course, in this case here, even the auditor, I could be forced, in this case here, to mention it somewhere. Again, depending on its materiality and pervasiveness. Materiality and pervasiveness. So, ladies and gentlemen, as much as I would wish really to continue, I have a very busy role at my workplace, which really cannot forgive me if I go there late. So it's exactly 6. So I would want to take this opportunity to wish each one of you success. What I would recommend, I've sent to you some videos, right? So before your exams, and ensure that you are listening to those videos quite a lot. And then, of course, good students will always look at this topic of what here, this topic of controls, you know, this thing of controls, where, for example, you're told here, controls over payables, right? What you need to know are the documentations. Which documentation do you need? If it's payables, of course, before we do this, there must be what here? Payables, of course, we bought goods. So we need to pay our suppliers. So like suppliers list, casting it, ladies and gentlemen, we have the concept of goods received notes, etc, 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 etc. We don't want to pay ghost workers. Then remember the concept of what here always, whenever you're asked about a procedure, management representations, always you think about inquiries and third-party confirmations, management representations, right? Of course, they have to be in writing. Ladies and gentlemen, I'll have to come and talk about what here under inquiries. I'll have to talk to these creditors. I'll have to circulate something to them, right? At times, you even exaggerate, like talking to a bank, given a particular invoice. Just write to a bank and tell the bank that there is this invoice, which I'm seeing some ordinary, an ordinary, right? Figures. I would want to know whether it is true that they were paid off like that. So that is it. Yeah, board minutes, yes. Those are the kind of things you write. Remember, in auditing, it is all about, in this case here, keeping the wheel rolling. Don't go to an auditing exam and then you start looking at the ceiling. No, it is keeping the wheel rolling for 3 hours. Don't go there and do what here? An exam, it's an easy exam, you do it in an hour and then you run away. No, you will not pass. Trust you me. Those questions may look easy, but remember how you answer them. You must be exhaustive. When they give you, for example, 4 marks, depending on what they tell you to do, if it's explanation, it has to be 2 pregnant paragraphs or dashes like that. Or you write like a point and then you try to expound on it like that. So it will be very important for you to exhaust those questions the way they are set. They are set in a way that you should be able to do them in how many hours? 3 hours. There is no hurry. You're not trying to please anybody in the exam room by walking out much earlier. No. And then, of course, regardless of how hard the paper is, always ensure that you're doing what you're writing something. Now, after you finish, ladies and gentlemen, please remember, you need to come and join us for the advanced. I'm really waiting for you. Already have started for the advanced level. Join us for the advanced advanced level. And of course, you'll have to do, this semester you're doing 4 papers. This semester you're doing 4 papers alone. You guys are lucky. You can decide, don't do 4, do 3 papers alone. do 3 papers alone, do 3 papers alone, so that now the other paper, you'll be able to combine it with your project, right? With your business analysis project later. So these 3 papers, you need to do them with us. They are leadership and management. We have AFR, and then we have what here? We have AFM. The others, like AMA, I know very many people will not be doing AMA. Now people will be choosing between tax and audit. Tax and audit, depending on what would you want to practice in the future. If you'd want to go for these highly lucrative industry called KRA taxes, then you do advanced tax. If you want to become an auditor, you do AAA. So that depends on you. But please ensure that you are choosing RCM, Online College. Online College. Of course, you guys have our number of 0719 525,000. And remember, we have got very good packages for you this time around. For example, if you pay us for these 3 papers at once, each paper, of course, costs 3,500. We shall be able to give you training in QuickBooks for free. QuickBooks for free, training in QuickBooks for free, training in QuickBooks for free. This will, of course, be helpful. So you can either choose between QuickBooks or what advanced Excel. But if you pay for the 3 at once, and we are starting this program over this weekend. Otherwise, it has been a pleasure hosting you. It has been a pleasure hosting you. I look forward, ladies and gentlemen, to meeting you again. And of course, I wish you the very best in this 2022. Of course, the very best tidings will start with this pass in AAA, auditing and OTR assurance. Otherwise, thank you very much. Bye-bye.